Listen, you wouldn't believe what Wacka Flocka just discovered. I need you to watch and listen to this.
One day a friend of mine was like, yo, man, I went to school for being a financial historian. So I'm like, bro, I don't know what that is. What is that? And he's like, bro, we study rich people's spending habits. I was like, oh, snap.
The moment he found out what wealthy people did with their money, check out what he did.
I'm going to open up insurance, put 2-3 million in my insurance and borrow from that. And put it.
Now, I know what you're thinking. I don't get it. How exactly does this work? That's exactly what you're about to see. Let's head over to the board.
All right. So basically what Wacka Flocka was saying was that before he discovered where wealthy people kept their money, he had millions of dollars, and that money was basically kept inside of a bank account, all right, where he was earning 0.001% or even less. The banks then take that money and they put it into a life insurance policy, also known as Index Universal Life, where you are able to earn anywhere from 6 to 15% on average. Okay. Once the banks once they grow their money in life insurance policy, then they issue it out as loans to consumers, credit cards, mortgage, car note, whatever the case may be. And then once they make money here, you now come back for your money, and then they pay back the savers. All right. And that's why savers are losers. Your money is not growing in your savings account. Okay. Now, what Wacka Flocka discovered was that instead of giving the banks his money, he now takes this money and he directly puts it into an IUL by himself, his own policy, where he can earn 6 to 15% on average, right? The beautiful thing about IUL is that you can grow your money in this life insurance policy tax-free, okay? Also, it has zero risk, which means that you don't lose money when the market starts to go down. You only make money when it's going up. Now, of course, you got the death benefit, which means that when he does pass away, his family will get the death benefit payout. Then it also has critical, terminal, and chronic illness, which means that if he were to fall ill under one of these conditions, he can actually access the money in a death benefit while he's still alive, in addition to the cash value. And of course, you got protection against lawsuits, which means that no one can come for the money in this policy. Then you got the uninterrupted compound interest.
Now, the uninterrupted compound interest means that you're able to borrow money or take out a loan from the cash value or money in your policy without negatively affecting the growth of your policy. Well, how is that? Well, it's almost as if when you borrow or get the loan, you actually get it from the general ledger, the general account of the insurance company, not from your actual policy. So your policy keeps growing uninterrupted, as if you never took out the loan from your own policy, which is pretty cool. So you're able to make those investments while your policy keeps growing. It's pretty cool, right?
Basically, with the money that you take out from your policy, you can use it to invest in a business, a franchise, real estate, or any other income producing asset.
So as you can see, the Index Universal Life, or IUL, it's not something that's exclusive to Wacka Flocka or the wealthy. It's something that the average person can do. You can do it. Now, if you know the rules of the game and you play it right, that's how you get wealthy. It's not because anyone's better than you. You just don't know the rules and you're not playing the game right. So connect with me. Let's chat and get you in a better position.